On Friday the 25th, the S&P 500 made a pretty good run up towards the all-time closing high and had a high of 5862.82, the all-time closing high 5864.67. And there was forceful downwards pressure around that all-time closing high and had a pretty good downdraft, brought it back up to the 5846 level, which is the rising line wedge breakdown measure line, and that level would be right there where it broke out of that wedge to the downside, and then that all-time closing high right around here. And in the S&P 500 weekly chart, I'll go over the ascending broadening wedge pattern that started back here in 2016. So here's the top line, and you can see it went under another line here that I created, which is now on top of the ascending broadening wedge top line, and that's the one we're dealing with today. Here's the bottom line here, and it ended right around the COVID crash, and it was a textbook 10% downdraft when it crossed underneath it and hit this closing low here. And that's where I base the bottom of the line here that extends out and was really good support. So that could come back into play one day. And if there's a really big disappointment soon for the end of the year, it could challenge this first ARC 2 level at 0.382 Fibbo, right around 5,000. And let's zoom into this current area now. And this weekly downtrend line held, so it's been moving a bit since it started right about here. You can see the original one in this zoom that I pulled the tape to, and it broke out here, had a scare as it went under here, but then nailed that bottom of the diamond pattern line extension here. You can see it here too, so that's right around this area in the current day. But the downtrend line that's been traveling here came pretty close on last week's level, was around 58.70 or so right there. So it will start the week, meaning price, underneath all of the uptrend levels. Here's the one from 2016, and then the top of the diamond pattern line extension here, and underneath the weekly downtrend line. Let's see those levels. Okay, so here's the weekly downtrend line, 5859.93, and the weekly rising tops trend line from 2016, 5830.28, and the weekly diamond top extension from 2019, 5837.17, and the 4 simple moving average in blue has crossed under the red 9 simple moving average, and this gold one is the 18. So it had a pretty good run staying above it. Had that rainbow pattern going on pretty good here for several days. It made a dip underneath it here and a pretty big one back here till it went back over the 9 red here, and then the red went back above the 18 here and had a pretty good run. And the rate of change since the all-time intraday high hasn't been all that drastic, so the rack has not gone under its oversold like DM1 did and is pointed back up. And the REI is still sailing away pretty good above its overbought line here. Had one little dip underneath it here, but that's a sign of strength here. And maybe when the DM1 goes back above its oversold line, could be a buying opportunity that I would not get too comfortable with. I get more comfortable with it when the rock makes it under the oversold, just like DM1, and then they both cross above their oversold lines again, while REI is still sailing away above its overbought. That's a sign of strength. Maybe when the 4 gets back above the 9 red and those two stay away from going under the 18 as the 20 simple moving average in blue, the 35 in red, and the 50 in gold has been sailing away in the rainbow pattern for quite a while. Here you can see the 20 went above everything right here, went above the 35 and 50, and then the 35 went above the 50 here, and it's just been sailing away pretty good. So if this 20 goes back under the 35, that could spell trouble, but it's quite far away from even making a slight bend to the downside for the 20. And down here, the ATM trigger fast trigger has made it below oversold, but the fast trigger has managed to stay pretty close to above its overbought, and the pressure is still pegged to the top at 102. So if the fast trigger can make it above its oversold, that would be a buying opportunity. And if the slow trigger heads down to meet the fast trigger, that could be big trouble, especially if the pressure makes a move to the downside off of 102. And there's been plenty of warnings in the form of P alerts for the chart lines, which is an indication of this pressure line down here. So we've had some solid purple P alerts, and it's gone now on this updraft. And there was a P alert here too, and that went away. And when there's solid over here P alerts for the long-term overbought up, most of the times that means there's going to be continued up moves for price as pressure stays up. And way up in the 90% percentile, if there's a solid P alert here that is sustained for several days, that's a really good indication that the pressure on the ATM trigger is going to make a move off of up and head down, and that would be a bad sign if you're long. But for right now, all of this looks pretty good. The plus DMI in green kissed the minus DMI and then bounced to the upside, and the minus bounced to the downside. That's a pretty good sign. And the ADX has stayed above 20, so the upwards movement of price is still intact. I don't want to call it a trend, but the movement direction is definitely to the upside. And the QQE, similar to RSI, is barely above the slow QQE for the fast in blue. So as long as that stays around there and then rests and then heads back up, maybe something similar to this back here just rested on that slow QQE, and then the fast QQE took off to the upside, and so did price.